Call the Housing Policy and Finance Committee to order. Today is March 16th, and it is 1:03 p.m. for the record. And the first item of business today is a report from the Minnesota Housing Financing Agency, and they're going to give us an update on their rental assistance program. And members, if you have questions as we go, please raise your hand. And Ms. Ho, we'll have you go ahead, and we're going to try to keep this portion of the meeting at about 20 minutes. So members, if you have questions, you can raise your hand and we'll ask them as we go. And Ms. Ho, if you would like to present your report, we certainly appreciate it, and welcome to the committee.
Chairman Dames and members of the committee, for the record, my name is Jennifer Ho, and I am the Commissioner at Minnesota Housing. I am here today with Assistant Commissioner Ryan Baumtrog and Deputy Commissioner Rachel Robinson, who are in the wings in case you throw me a curveball. I will note that today is March 16th, and it's been exactly 1 year since I have been in my office. It's been a heck of a year, I guess we would say, in Gary Eichten speak. But also, I think that I talked to you in January about the Consolidated Budget Act of 2021 that the Congress passed at the end of December, and we now are beginning to bring that program into greater focus, and that's what I want to go over. And then because what fun would it be to talk about the program that we're trying to stand up from December if I didn't also preview what we learned from last week's American Rescue Plan Act. So again, the dust is just beginning to settle on the bill the president signed last Thursday, but I will at least highlight some things that we have coming there. So Ryan, if you will, the next slide, please. So for context, the COVID emergency rental assistance was $25 billion in the Consolidated Budget Act. And it is really the first time that Congress has made an investment in state housing finance agencies of this magnitude to deal with homelessness prevention, eviction prevention, and keeping renters and landlords going due to the economic strains associated with the pandemic. It is, unlike the program that we ran with coronavirus relief funds, is targeted just at renter households, not at homeowners. It's not up and running yet. We just got guidance from the new Treasury team at the end of February, and there's a lot of detailed guidance around documentation of eligibility. So we're trying to make sure that we get all of that incorporated accurately, so that we're in compliance with Treasury oversight and the law. So it's not yet open for folks who are listening who need it. Help is on the way, but it's not open yet. But we will be very loud and very far-reaching once it's open in terms of what you need and how to get it. The state of Minnesota received $375 million for the program. Actually, it's probably closer to $400 million when you count the allocations that went directly to tribes. So it is an enormous amount of assistance, but we also know that we've got pretty enormous need out there. By some estimates, 75,000 to 100,000 Minnesotans are behind on their rent. And surveying suggests that as many as 150,000 households, renter households, lack confidence that they're going to be able to pay in the future. So, the enormity of the program is, I think, something that we anticipate being able to expend. Next slide, please. As I mentioned, the state's getting about $400 million, $375 million goes to the state and to jurisdictions of over 200,000. That includes Minneapolis and St. Paul, as well as Hennepin, Ramsey, Dakota, Anoka, and Washington County. So we will have multiple administrators, and 9 of the 11 tribal nations received a direct allocation. So clearly, we're trying to do something fast, and we're trying to do something collaboratively. I guess probably this body is as good as an example of speed and collaboration. It's a hard thing to do both at the same time, but we're working really closely, especially with the metro counties and the cities, to develop a common application. And
Ms. Hull, if I could interrupt you for a minute, I do have a question on, you're on page 3 where it shows that about 85 million that you had mentioned to go on to 7 cities and counties. So they're going to get 85 million. Are they going to be eligible to apply for grants on the balance of the money also or not?
We are doing a direct assistance program with the 290, but we are serving the whole state. So if they've got fairly small allocations, and we expect that they could run out of money, although the American Rescue Plan from last week is expanding the pot some, so it's a little unclear to tell. But our assumption is that the state is running a statewide program and the localities are running local programs, and they'll run out of money first. And then there's also some incentives based on our spend rate that we could actually recapture money that other parts of the country don't spend heading into next year. So there's some incentive for all of us to get the money out.
The basis of my question, it appears that the answer to my question would be yes, they will be able to get from both. Correct me if I'm wrong.
Yeah, Chairman Dames, we won't be granting money to local jurisdictions, but residents of those local jurisdictions could apply to the local program or to the state program. So yes. People are eligible for both.
Thank you.
We have had some questions because even though we are coordinating with the counties and the cities on a common application, Hennepin County did indeed launch a simple test application that's handling a small number of applicants, about 1,000 households. And they wanted to get that out early. They will be moving those families over to the centralized system when we launch the statewide centralized system. So for folks who hear that it's up in Hennepin County, it's up. I don't know if it's still taking new applications or if they've already closed down to new applications. I can check on that. And then with last week's American Rescue Plan Act, the funding was extended. So not just being available in 2021, it extends the available funding out till September 30th of next year. So it's nice to have a slightly longer path because of the enormous size of the program. Next slide, please, Ryan. Great. So to be eligible, you need to be a renter. You need to be a Minnesota resident. The income standard is set by the federal government at or below 80% of area median income using that county area median income differs across the state. You have to have experienced financial hardship during the pandemic and demonstrate some risk of being homeless or having housing instability if you're not helped. The federal government also asks us to prioritize households who are at or below 50% of the area median income and to prioritize households who have been unemployed for 90 days. This is an instance where the best thing to do is for renters and landlords to be talking to one another. Landlords are eligible to apply, but they still need to use the same application and demonstrate the same tenant level information. And if a renter comes in, they still need the support of their landlord. So the best advice that I can provide right now is if you're a renter or if you're a landlord, talk to each other. And we'll be getting information out soon about what it is you need to gather in order to complete an application. Slide 5. So households can get up to 15 months of assistance. It has a look back period back to the beginning of the pandemic. So, it could be if people missed the COVID-19 housing assistance program that we ran through the fall and up through the first week of December, there's a second chance to go back. But it also has a piece that has a prospective component. So first, we want to catch you up on your arrears. but the federal government is allowing us then to pay forward 3 months, which again is a tool for helping the landlord know that that there is going to be some stability going forward. And then in addition to people in rented homes or apartments, it also allows for rent for manufactured home lots and rented manufactured homes. In general, as with the COVID-19 Housing Assistance Program, we will be collecting information about the landlord and making all attempts to make the payment directly to the landlord. But the congressional language does allow that if a landlord doesn't participate for whatever reason, that we can pay the assistance directly to the tenant. We did have some instances in our COVID-19 Housing Assistance Program where we had a hard time following up with the landlord to get information. So we see this as being not something that we'll do often, but it's a nice safety valve for tenants to have that. This is what I can tell you about applying, although it's not open yet. I just have to reinforce that because the systems are not ready. But when the program opens, there'll be a centralized call center that you can call or text or look at online. We're going to have staff available from 8 to 8, Monday to Saturday, but the website will be available 24/7. That online platform, as I said, can be used by both tenants and landlords, ideally both together. But there also will be hard copy and paper options for applying if you don't have access to internet. There are, again, with the money last year, we used the Coronavirus Relief Fund, so we got to define the specifications of the program. In this instance, the Treasury and the Congress have defined the specifications of the program, and we are going to have to have some documentation, proof of income, and things like that, which can be uploaded if you're online. If you're not, somebody could help you, or you could do this by mail. And again, I'll just say it again: landlords can apply on behalf of their tenants, but the tenants still need to sign off on the application. Next slide, please. Because we know that the online centralized system doesn't work for everybody. Not everybody's connected, and not everybody finds navigating that type of a system the easiest thing to do. We are also engaging a network of field partners. These are nonprofit and governmental agencies that really do that kind of in-person, kind of community-based work. They will be fully trained on the program so that they can do outreach, that they can help people navigate access. Maybe you go into your community nonprofit and they're the ones that have the internet and help you download your documents and things like that. We're going to do a week of training and technical assistance with these on-the-ground folks to really help them understand the application process and what folks need to do in order to be eligible. And really, the organizations are ones that really have demonstrated the ability to reach people who are the most likely to be experiencing housing instability. People that can help people who don't speak English or where English isn't their first language, people who can help people that just need special assistance accessing the program. And then there will be, connecting points so that the field partners can help get people into the application and the processing system. And we're just in the final stages of contracting with these partners. There'll be a full list available on our website soon. So that's December. Let's race forward to last week. The American Rescue Plan Act. I've been calling it an avalanche of goodness that happened in this bill last week. Passed by Congress on the 10th, signed by the president on the 11th. It has more emergency rental assistance that is similar to, but not exactly like, the program I just described. And it also has a new homeowner assistance fund. So making up for the fact that the emergency rental assistance didn't do anything for homeowners who are behind, possibly in forbearance, but coming to the end of their forbearance period. And then through the HUD Home Investment Partnership Program, an infusion of capital dollars to help on homelessness, shelter, and supportive housing. So that is kind of a new program under an existing funding stream. We also know that there are additional housing counseling dollars available coming through a national network called NeighborWorks, and there's additional fair housing money all through the U.S. Department of Housing and Urban Development. Like I said, this just passed last week, and the Treasury Department and HUD have not yet published all of the allocations. Next slide, please, Ryan. Thank you. So we're estimating that the state's going to get about $200 million in the next round of emergency rental assistance.
Ms. Ho, I'm going to interrupt you for 1 minute. I see Senator Dietzick has her hand up. Senator Dietzick, do you have a question?
Yeah, sorry to interrupt, but I know I have a few constituents that are in forbearance, and I think I'm working with them as I think they have a $12,000 payment due in April here coming up, March, April, and I don't think this money is going to get quick enough. So, you know, as part of the communication plans, which I have other questions that I can ask later, but, and I think we have home ownership group here later, so I might ask them too. What plans do we have so that people and banks, quite frankly, who are, you know, requiring these people to pay these funds maybe in March or April know that, you know, there's potentially money that might not get to us till May, so that we can help these people. I mean, I lived through the foreclosure crisis working in North Minneapolis when that, you know, and they were ground zero there for a while. And so in my opinion, if we can keep people in their homes, and that includes renters and homeowners, I think it just helps everybody. So any thoughts on that?
Ms. Holt.
Thank you, Chairman and Senator Dietzick. Yeah, I mean, like I said, you know, the ink's barely dry on this, and we're trying to figure out how to message it. Obviously, we're going to have a loud communications campaign when we roll out the emergency rental assistance, and I think that we need to figure out how to signal that help is on the way for homeowners. It clearly is, you know, the decision of each mortgage lending institution in terms of what they've done around forbearance, unless you have a federally backed mortgage. And so there's a fair amount of complexity that doesn't help in the messaging on this. And then I think the other question is just what happens at the end of a forbearance period. Are you required to have a lump sum payback of the amount that you were behind? Can you refinance the whole mortgage in order to have more time to pay it back? So this is an area where I think getting the messaging right is going to be really important. I think, you know, my message today is that I'm really grateful that Congress did something for homeowners, and the whole process of kind of winding down forbearance is going to be a complicated one because of the different lending practices of different institutions. But the same way that the Attorney General and the Governor and the Federal Reserve and many banks in Minnesota came together last summer to try to commit to do what's right by homeowners through this period. I am hoping that we can gather some folks together to just make sure that we are. We've been talking a lot about the off-ramp to evictions, and we talk probably more about renters when we do that. But the off-ramp for homeowners kind of goes through forbearance, and whether somebody's back at work again or whether they're still unemployed when their forbearance period ends. But is all, you know, it's just going to be so many different scenarios. But I guess my message is that help's on the way. And if we can just have a little bit of patience so that we can get this money into the hands of homeowners and therefore their lenders, that seems like the best result for all Minnesotans.
If you would continue, Ms. Ho, with your presentation.
Thank you, Chairman. I think on to slide 11, right? Okay. So the additional emergency rental assistance, we believe will work the same way it did in December, that the allocations will be directly available to Minnesota Housing and the local jurisdictions. As I mentioned, it has a longer expiration date, so it pushes us out into 2022. It now extends the period of eligibility from the 15 months that I just talked about to 18 months. And I'm sorry, it's confusing because we got two versions of the same program that happen within 3 months of each other with slightly different rules. And then the other thing that we view as a positive adjustment in this next tranche is that 10% can be used for a broad array of housing stability services that we have yet to fully unpack. And instead of the 10% admin cap, it has a 15% admin cap. 10% was pretty lean for something this big and fast. And then just 2 more slides on the homeowner assistance fund. Again, this will be brand new. Congress is asking that 60%, at least 60% of the funding be targeted to homeowners that have incomes below 100% of AMI or 100% of the US median income, whichever is greater. I am guessing in Minnesota that in most instances, the Minnesota median income is greater, but we'll have to unpack that. And then the purpose, the eligible uses is preventing mortgage delinquencies, defaults, foreclosures, as well as loss of utilities or home energy services. And of course, all of this aimed at preventing displacement. And this is for homeowners after January 21 of 2020. And please don't ask me why January 21 is a key date. I'm sure maybe that's the first federal day that we saw COVID in America. I don't know, but that's the date for that. And then finally, just a slide on the new Home Investment Partners money, using an existing funding stream at HUD, but for a new program for kind of this broad category of people experiencing or at risk of homelessness. And the eligible uses, interestingly, are building off of a California model that they did last year, where they purchased the hotels that had been leased as non-congregate shelter and isolation space. The state of California was able to convert something like 6,000 hotel units. And then the intention is that they would either be used for non-congregate shelter or eventually converted to permanent, affordable, or supportive housing. There's also the opportunity for some tenant-based rent assistance in there. We think that the state of Minnesota is going to get just over 67 million of this allocation, of which 31.6 million would come directly to Minnesota Housing. And in this instance, the local jurisdictions who get their own home allocation are Hennepin, Dakota, and St. Louis counties, Minneapolis, St. Paul, and Duluth. So the income thresholds are all different. The dates are all different. The local jurisdictions are slightly different. And the uses are slightly different. And it's just a very, very large infusion of federal assistance to help us kind of manage our way out of the crisis. The one thing that I just want to say about what's not here is that other than the conversion of hotels, which is clearly a pretty limited use, kind of more like a single room occupancy supportive housing setting that one could envision, not a dime of this is intended to create a new single family home. It's not a construction piece. And And with the exception of the hotel piece, it's really not a preservation piece. So while all of this funding is targeted towards an extraordinary need that we have right now because of both the pandemic and the economic impacts of the pandemic, it doesn't deal with the fundamental problem that we've been talking about solving together, which is just the need for more units of housing and the need to preserve the housing that we have here. Perhaps if Congress does an infrastructure bill, but I think this is we need both and so, and I'll just say that Minnesota Housing has never run programs of this size. Even if we've done some things that are like this, I would remind you that our biennial appropriation sits around 125, 130 million for the biennium. If you add all this up, it's something around $500 million of one-time money to the agency. So we are stretching our muscles, shall we say, as we work on figuring out how to get all this stood up in a way that works well for all Minnesotans. And with that, I see the other chairman is here. I don't know who I defer to, but I will defer to all of you. Members of the committee, I'd be happy to take any questions.
Senator Dames, I think you're muted.
I'm going to turn it over to Chair Jauheim, and thank you, Ms. Ho, for being with us. We certainly appreciate it. And Chair Jauheim, I'll turn it back over to you.
Thank you, Senator Dames, for filling in. I really appreciate it. Sorry, members, I was presenting a bill in another committee. Commissioner Ho, thank you for the phone call the other day and the conversation and for coming today. I know there's a bunch of other states that have their programs up and running, and I don't know if I missed that part of your presentation. I think it's up to 30 that are running. Can you just give me a real quick on a guesstimate on how many weeks until you're operational? And I probably missed that part of your presentation.
There are a number of states that are out ahead of us, and there are a couple that wanted to be running, but they've stumbled a little bit, and we're trying to avoid the stumble. The complexity of the documentation requirement and trying to translate that to a simple application that is available online and easy to use is really what we're aiming for. I believe that one of the lessons of the COVID-19 Housing Assistance Program is that speed of implementation, in hindsight, led to a long tail on the processing of applications. And so as much as my whole team just urgently knows how badly this money is needed, I think we also know how well we need the system to work. And it's unlike the coronavirus relief funds, where the local governments and we all designed different programs that work differently. We're trying to do this with some type of unified process, so that when Hennepin County runs out of money and you got to come over to the state system, it doesn't look completely different. It's not going to be like a complete do-over. We're still aiming for by the end of the month, but I also have given my leadership team permission to say, if we're not ready, we don't go live.
Sure.
Everybody knows what it feels like to be a government system that goes up and doesn't run smoothly, and I don't want to be that. I don't want to be that system. So
I appreciate that, Commissioner, yep. and I understand where you're coming from on that. I just two more questions, I guess. When you talked about the system that you guys are building and working so hard on, are you going to have built in there a couple things? One would be the 80% of AMI. And then the second thing would be, are you going to have any kind of warning that they shouldn't double dip and apply for one of the cities, the county, or the state? Commissioner, thank you.
Is Chairman Dames still chairing, or are you chairing, sir?
I am, sir.
Okay, all right. All right.
Commissioner Hull, thank you.
Chairman Draheim, the income threshold is at 80%. I think there's an opportunity to target at 50% or below. I think if we saw the drawdown of funds going faster than projected, we would potentially ratchet it down later, but we're going to start at 80%. We're going to start at people who are behind. So even though we have the ability to go forward, we're going to start by people who have been behind and get them caught up, and then start moving forward. So that's the plan right now.
Thank you, Senator Dietzig.
Thank you, Mr. Chair. And I did ask while you were gone, and I'll just repeat again that I think we would like to see so that people can go in and get smoothly if we have documents, and if the landlords and the tenants know what documents they need in advance, like, just telling people in advance, okay, what do you need to qualify for income? What documents do you need? Just to literally help that process go smoother, and then get that, how are we going to get that communication plan out? Because people's lives are so busy, and they're, especially if you know you're behind in rent and don't have a job, you're focusing on finding that job. And so how are we going to reach those people? And I've, also talking to the landlords in my district on just how are we going to help reach those people, and what do they need to help make this go smoothly so that we can keep people in their homes. And then also, I don't think we need this today, but I mean, you did mention about 500 million one time coming to the agency. And so that is a large cash flow. So I don't know, if you have we don't want a system to crash, so I don't know who the vendor is that is preparing the system, but making sure that is working, I think would be helpful. But also, that's a lot of money coming in. And as you get more information about the bill that just passed, the American Rescue Plan, it would be good to know, how much flexibility is there in that plan? Because while this is a lot of money targeted at keeping renters in their homes, which is good, is there some flexibility, and then maybe we don't need the Homework Help Starts at Home program, but how does that relate to some of the other programs that we have that we typically fund? And I think I saw in there that it can help with some manufactured home, maybe mobile park rents. But, I don't know if it helps with like first-time home buyers. And, I think we're going to hear Senator Housley's bill on homeownership education, and I don't know how much of that. So as you learn more, finding out what that flexibility we have in those federal dollars, that would be helpful as we prepare, the bill moving forward to just figure out, because we do have a lot of housing needs all across the state. So thank you.
Okay, I've got a chairman and senator. I wrote down 4 things that I think I'm covering here, but let me know if I've missed something key. On the topic of double dipping, it's the benefit of using a shared system. If we have a shared system that then triages the application out and divvies them up between the state and the local jurisdictions, but we can all see who came in, then we know if somebody's already been served by another partner. So it's one of the real benefits of collaborating on a shared system. Think of it as one system instead of 8 systems. And that's, but you've got each local jurisdiction bringing its kind of processing power. And what I really like with the counties is you've got the county financial worker who actually can then look up other programs for which you have income verified. If you have done an income certification for another government program in the last year, the fact that that has happened is considered adequate verification of income. The complexity here is that some programs you're eligible for as an individual and other programs you're eligible for as a family. So for example, in a situation where you have a couple and one person has maintained income and the other person has lost income, gone on to unemployment insurance and receives medical assistance. If you just looked at the unemployment insurance and the medical assistance, it would look like the household was income eligible. But if you looked at the other family members' income, they would be above income. So being eligible for medical assistance doesn't necessarily make you eligible for the program. If you have a student who's eligible for free or reduced price lunch, that's based on family income. So eligibility for that would demonstrate eligibility for this. But that is information that every school district in the state keeps. It's not centralized at the state. The other thing that we've found to be complicated is because of COVID, the federal government gave income certified programs the ability to stop doing the same periodicity of income certification. So it might be that the last time you got income certified for a federal program was last March, and you may not have an updated income certification on your file. This is why this whole application process is just so wildly complicated. If you live in HUD housing, a public housing building, your public housing authority should have the most recent income certification for you on file. But they may not have had to recertify you over the course of the last year. So if you have a PHA housing choice voucher, your landlord would know that you were eligible for that housing choice voucher, and everybody with a housing choice voucher at least would have initially income certified at 80% of AMI or below, but you don't lose your voucher if you're over 80% of AMI. So the complexity of all the different income eligibility criteria for all the different federal programs, let's just say I've been spending a lot of time with the other agencies. So for example, DEED can push an email to everybody on unemployment insurance. We believe the caps on unemployment insurance, even with the $300 plus up, would keep a family that just had one person on unemployment insurance and no other income eligible, but we have to check and see if there are other family members with other income. So this is, it's complicated. I just as we began to do the spreadsheets and tables on this stuff, it was complicated. On communication, Senator Dietzich, we are doing something un-Minnesota housingly. We have contracted with an outside marketing firm. It turns out that there are firms that really know how to simplify complex messages. And I think we're going to need that here. So the Get the Word Out campaign, we will be obviously using the platforms that the governor and lieutenant governor have. We'll hit major media markets, but we're also hitting niche media markets. This might be the first time I left my house since early November. If we have an opportunity to safely tour the state and try to gather local media and information on this. And then finally, we will have a Get Ready website up before the program launches. We've got daily meetings on that right now. And what the Get Ready website will do is let you know what are the types of information that you should gather and how does a landlord and a resident work together in order to get ready to apply. So that will be the next step on this. My staff are bombarding me with texts, but I think I hit the key points that you had asked about.
Thank you, Commissioner. Any follow-up, Senator Dietzich? Thank you. We'll go to Senator Dames, and then we'll get moving on to Bill's members.
Mr. Chair, and thank you, Mr. Chair, and Commissioner Ho, on page 4, when we were going through the worksheet, you talked about household incomes and stuff, and you said the priority was going to be for people at or below 50%. But yet when the chair asked a question, you said you're going to start at 80% and then work down. I guess I'm wondering why you would start at 80 and then as the money runs out, drop down to 50, why you would not start at 50 and accelerate it up if you had the money to do that, so that the lower income people at 50% or less would end up without having money in the program.
Chairman and Senator Dames, it's a fantastic question. And the reason that we believe we can do that is our experience with the COVID-19 Housing Assistance Program. We use federal poverty level for that program, not area median income. But what we found is that over 90% of the applicants who came to us under that program, even though you were eligible up to 3% of federal poverty, over 90% of the applicants were at 200% of federal poverty or below, because it's poor people who are suffering the economic impacts of the pandemic the most. So we believe that the pandemic has already done the sorting and the vast majority of people that we will see are at the lower income levels. So we believe that just eligibility itself will sort itself to be below 50% area median income in general.
Thank you, Commissioner. Any follow-up, Senator Dames?
Thank you. Nope.
Okay. One quick question, Commissioner, and then I'll let you off the hook. I appreciate your time once again. When you are up and running, will the actual process the applications be quicker than what it was with the last program? And what would that timeline be you project?
Chairman, the answer is yes, it needs to be. And we have designed a completely different back end in order to get that result. With the COVID-19 Housing Assistance Program, we had 52 different local grant administrators that were each processing their own payments. And what we've done this time is that we do have local field partners that are going to be doing that kind of navigation work with people, helping them apply. But once you get your application in the system, we've got a national emergency services administrator that is used to doing big and fast, that is touching it from complete application through to payment. And we're going to be able also, therefore, to track the metrics of processing time in a way that we didn't see it in our front end system last time. So we only had visibility into applications and then a certain number of stages of the application. We're going to have real-time data on the whole process this time and expect it to be, it just has to be, it just needs to be significantly faster. And I just thank everybody for their patience who waited. We have now touched base with everybody who has applied. We've got a lot of folks where we've requested information and we haven't heard back, but we will have all the claims from the COVID-19 Housing Assistance Program paid possibly by next week.
So, Commissioner, I appreciate you've touched them all. Does that mean that their payments are being processed, or how many outstanding payments do we have with that chat program?
Where we have a request for more information and we're not hearing back from people, we don't know if they're gonna come back to us. So we don't know how many of those are going to be considered withdrawn versus how many folks are going to give us the information that we need so that we can complete payment. So I don't have final information for you on that yet, but I know the two biggest categories that we have right now are moving towards payment and waiting for additional information.
So how many dollars are we talking about, Commissioner, on left on that 100 million?
I did not bring that data with me today. I can follow up with you after the committee meeting. There's a whole reconciliation process that's going to have to happen because some of the individual grant administrators are just wrapping up themselves. And because our system didn't actually capture all the way to payment, we got to do a contract reconciliation with each of the 52 administrators. I'll have an estimate for you a couple weeks after we wrap up, but it's still going to be an estimate until we reconcile.
Okay, thank you, Commissioner. And thank you, members, for the questions, and Senator Dames for covering for me.
Chairman, I need to leave today. Is that okay?
Yep, I appreciate your time.
Okay, thank you so much.
Yep, thank you. We're going to move into bills, members. Senator Housley has been waiting patiently. Senate File 1928, Home Ownership Education, Counseling, and Training Program Appropriations. Senator Dames, would you like to move this bill?
Yes, sir, Mr. Chair. I'll move that Senate File 1928 be laid over for possible inclusion in the Housing Omnibus Bill.
Thank you, Senator Dames. Senator Housley, please begin.
Thank you, Chair Draheim. Senate File 1928 is an appropriation for the Homeownership Education, Counseling, and Training Program, otherwise known as HECAT. The HECAT program provides homebuyer education and pre-purchase one-on-one training to ensure that families are prepared to be successful and long-term homeowners. Additionally, HECAT funding helps provide the much needed foreclosure prevention counseling and preserve affordable homeownership. This fund is the primary way that the state supports education and advising for lower income households and households of color to achieve homeownership. Access to independent education and advising that's supported by HECAT is one of the primary contributors to promoting homeownership. HECAT is instrumental in providing support to homeowners facing mortgage crisis. As we learned during the foreclosure crisis, homeowners with mortgage problems are 3 times more likely to stay in their homes if they have access to foreclosure counseling like that which HECAT supports. Given the homeownership crisis caused by COVID, we need to increase the funding in order to stabilize families and communities. And funding provided by the state through HECAT leverages over $1 million in private and federal dollars. And members and Mr. Chair, there is a letter in your packet from Homeownership Minnesota. It's a 13-member organization, and they are in support of this bill. Thank you, Mr. Chair.
Thank you, Senator Housley. I think we'll go to your testifiers. We have up first Minnesota Home Ownership Center, Ms. Guggen.
Chair Draheim and members of the committee, thank you for allowing me to speak today. My name is Julie Guggen, and I'm president of the nonprofit Minnesota Home Ownership Center. We are an intermediary sitting at the center of a diverse group of stakeholders who are dedicated to equitable access to homeownership. A primary business line for us is homeownership education, financial counseling, and foreclosure prevention. We work with 40 nonprofit and community-based organizations around the state on this work. A primary source of funding for our network is the Homeownership Education, Counseling, and Training Program. Last year, HECAT supported over 5,000 households statewide in their pursuit of sustainable homeownership. 63% of those households are households of color. The median income of the families that HECAT supports is $41,000. Services funded by HECAT open doors to down payment assistance programs and affordable lending tools. Many require the services offered by our network. Financial coaching and homebuyer services like those supported by HECAT are continually cited as a critical element of closing the homeownership gap. In addition, HECAT provides much needed funding for foreclosure prevention services. Any homeowner in Minnesota, regardless of income, is eligible for free, unbiased mortgage crisis and foreclosure counseling support. Since 2008, the center has worked with our network partners to help more than 38,000 households successfully avoid foreclosure and mortgage crisis and maintain the stability that homeownership offers. Our current estimates are that about 30,000 homeowners in Minnesota are seriously delinquent. That is 90 days or more past due. As temporary mortgage relief programs begin to lift, those homeowners all need support from our network in navigating the complex and fraught process of negotiating with lenders, understanding the foreclosure process, and knowing their legal rights. Mortgage borrowers who receive foreclosure prevention advising are 67% more likely to be current on their home loans within 9 months compared to those who do not receive advising. We are determined to prevent a repeat of the 2008 foreclosure crisis, during which so many lower and middle income individuals and families lost so much. Back then, our network organizations were frontline responders. We worked quickly to raise and deploy resources to support foreclosure prevention, advocacy, housing development, and community healing. An increase in HECAT funding is essential to stabilizing homeownership in Minnesota and advancing equitable access to homeownership in communities of color. Thank you for your consideration. Happy to answer any questions you may have.
Thank you. Members, we're going to move on to the second testifier and then we'll take questions. We have the Homeownership Specialist, Washington County Community Development Agency, Portia Jackson. Please begin, state your name for the record and tell us who you represent and begin your testimony.
Hi, my name is Portia Jackson and I'm a homeownership specialist with Washington County CDA. Hello, Mr. Chair and members of the committee. Again, I'm Portia Jackson and I'm the homeownership specialist at Washington County CDA. I assist people in the goal of attaining affordable quality homeownership through money management, building and repairing credit, and connecting them with trusted community resources. I also facilitate home stretch home buyer education workshops that provide valuable information to first-time home buyers across the entire process of home buying, from budgeting and mortgage readiness to life as a homeowner. In these workshops, I collaborate with mortgage professionals, real estate agents, home inspectors, title agents, and financial nonprofits that provide invaluable real-time information on the current home buying climate and take questions from prospective home buyers. I also help people stay in their homes through our foreclosure prevention program. I provide information on the timeline of foreclosure in Minnesota and tools that consumers can use to cure delinquencies with their mortgage loan servicers and keep their homes. Most times I can even help homeowners obtain a lower, more affordable payment through loan modification. I'm very passionate about this work as a housing counselor, supported me in the process of buying my first home 6 years ago. As a Black first-generation college graduate and mother of 5, I knew that homeownership was a big step in the direction of stability and building intergenerational wealth for my family. I also provide the tools and resources necessary to purchase an affordable quality home from PRG. Owning a home has given my children the foundation to excel in school and sports and realize their hopes and dreams. The Homeownership Education, Counseling, and Training Fund, or HECAT, make the work that I do possible. The important financial support enables Minnesota's Housing Counseling Network to provide intensive financial empowerment and homeownership training to low to moderate income households with a focus on households of color who have been historically excluded from owning homes, obtaining fair loans, and thriving in neighborhoods of their choice. Increasing HECAT funds will help us make the dream of homeownership a reality for Minnesotans that may otherwise be edged out due to lack of tools, resources, and education. HECAT directly changed my family's narrative from survive to thrive, and I continue to do so for families on an even higher level with increased funding. Thank you for your consideration and your time.
Thank you for your testimony. Members, any questions for either testifier? Senator Housley, any final comments?
Yes, thank you, Mr. Chair and members. I want to thank both Portia and Julie for what they do and for coming here to testify. As we all know, and it's the topic of your whole committee, how important making homeownership affordable and then keeping them in their homes also. So this is a great program and it's working. So I'm hoping you'll consider it in the final bill. Thank you, Mr. Chair.
Thank you, Senator Housley. Senate File 1928 will be laid over for possible inclusion. Members, we're going to keep on moving so we can keep going on our timeline. Next up, we have Senator Duckworth, Senate File 1904, Housing Rehabilitation Outside the 7-County Metropolitan Area Appropriation. I'll move Senate File 1904 be laid over for possible inclusion in the Housing Omnibus Bill. Senator Duckworth, to your bill.
Thank you, Mr. Chair, members. I appreciate it. This bill helps to solve the state's housing inventory shortage. It's a very worthwhile investment that's going to help homeowners, cities, counties, school districts, and ultimately the state as we try to find ways to address the housing shortage that folks are experiencing. So, Mr. Chair, without further ado, I'd love to invite the folks that are here to testify to speak on behalf of the bill. Mr. Chair, I can't tell if you're maybe speaking or not. You're still muted. While you turn your microphone on, I will say this is for a $5 million appropriation for fiscal year 2022 to be utilized for the program that you're going to hear the testifiers describe.
Thank you, Senator Duckworth. First up, we have Greater Minnesota Partnership. Mr. McMahon.
Great, thank you, Senator. For the record, my name is Scott McMahon. I'm the Executive Director of the Greater Minnesota Partnership. I appreciate the opportunity to speak on behalf of this bill, and thank you to Senator Duckworth for carrying it. As you've heard in past hearings, we have a real housing issue in Greater Minnesota, and we know we have housing issues across the state, but our issues are different from what we see in Greater Minnesota. In that, the challenge we run into is that the construction cost to build new housing to deal with the demand that we have often exceeds what that property is going to be valued at before or once it's completed. And so it's hard to either get private financing for the development or to convince individuals to put the money forward to deal with things. One of the lowest cost opportunities we have for expanding housing in Greater Minnesota is to get housing that's currently in our communities, but off of the housing rolls back into the pipeline. And what I'm talking about are houses that are currently vacant, that are not marketable, that are often substandard housing, but that are still, from a bone standpoint, are still really good houses. And so what this bill would allow to happen is for the cities to invest some money into updating those houses, to get them back online and get them owned by individuals who are looking for housing. Again, one of the challenges we face is when you look at the appraised value of that house once the house is purchased and once it's upgraded, again, it's often more than what that house is appraised for. So if we can deal with the infrastructure improvements that need to happen, then we can move it forward. One of the nice things with this is that, depending on the situation, it can address either our affordable housing issue or our workforce housing. If you take a house that's valued at $60,000 and can put $20,000 or $30,000 of investment into bringing it back up to livable standards, that's a relatively affordable house to get back online. And it's going to cost, far less than any other program that we have to get more housing in the line. So we think that this will have a significant impact on our ability to get housing back online. It'll be a quick way to do it, and it'll deal with housing that we already have that's currently not usable. So with that, I'm happy to answer any questions that members may have.
Thank you. Members, we'll go on to the second testifier and then take questions. So next up, we have Mr. Clark from the City of Austin.
Thanks, Chair Graham. Craig Clark, Administrator for City of Austin. We appreciate Senator Duckworth introducing this legislation and helping us out. To give you a sense of Austin's characteristics, 63% of our housing was built before 1960, and 34% of that was built before 1940. We've made significant efforts moving forward to deal with our aging housing stock since 2015. We've enacted a rental housing ordinance. With the environment that Mr. McMahon mentioned of the lack of new housing starts in our community, protecting our existing housing stock becomes that much more critically important, both for people to have a place to live in our community, but also protecting our tax base for the city as our primary funding source. We continue to deal with hazardous properties. We tear down about 3 each year since we've started our push in 2015. We also have about 9 backlogged due to the pandemic and items for 2020 where we're not able to access the courts. So we're taking specific action to deal with these nuisance properties. We've hired staff members to proceed forward on nuisance issues. In the fall of 2020, we enacted a new registry program, but we've had 200 properties addressed with various nuisance issues of roof repairs to painting and other violations to meet to come up to the state's minimum housing code. This partnership with the state would help us address some of those challenges that we're having and the investments that we've made from a local government. Addressing these and keeping our housing stock strong is what we're hoping for, that you'd give consideration to this legislation. And with that, I'd be happy to answer any questions you may have.
Thank you. Senator Dietzich, I saw a hand come up real quick. Did you have a question?
Yes, thank you. I didn't want to interrupt between the two speakers, but I'll start with the Austin Administrator, Mr. Clark, if possible. So you mentioned tear downs, and so I know when I worked for Hennepin County, sometimes the tear down cost itself is, it's not cheap. And so,
yes.
What does that cost? And then do you weigh that against some of them might be, a rehab prospect, and others are just not. So I'm just wondering, you could just share what that cost is.
That's right. Thank you, Mr. Chair. Thank you for the question. Yeah, we can, it depends largely on the asbestos of the house and size of the house. If we have a lot of asbestos, it can probably approach about $25,000 in cost. Probably most typically in that $10,000 to $15,000 in cost. for demolition of the buildings. What we're really doing here is kind of a Band-Aid approach. The economics aren't there to be able to address that. That's a loser for us. You know, when we tear down the house, the surrounding home values are often low. So there's, you know, the opportunity to build a new house that's going to cost you in the neighborhood of $200,000 isn't probably the most wise investment to put a $200,000 house next to one that's maybe 50, 60,000. So that presents some issues, but what we're really trying to do is kind of stop the bleeding, not allow that hazardous home to spill over into other homes in the neighborhood and protect our neighborhoods. There's a definite cost there, and I think you're right on the money as far as it's an expensive proposition, but one that we have to take to protect our housing stock. That's why if we can catch these homes earlier, we're doing many different ways. We're working with the county to try to expedite tax foreclosures when there's no heirs for the home. You know, they'll sit there and languish until they go into foreclosure. That's, you know, a several year process when a house can be neglected pretty significantly. So we're working with the county on those things too, but having this partnership to be able to catch them early before they become problem properties down the road is what we're hoping in this partnership.
Thank you. Senator Dietzich, any follow-up?
Just quickly, so I just want to clarify, because I couldn't tell from just reading the bill, but it kind of sounds like these are for the most part vacant homes that you're trying to preserve to, again, fix up and preserve on the rolls and then get, you know, hopefully new people moving into them. Is that correct?
Senator Duckworth, do you want to answer that? I see Mr. McMahon has his hand up. Should we go to him first?
Sure, Mr. Chair. Thank you.
Okay.
Thank you, Mr. Chair. You know, in these situations, we envision this to be a situation where it's houses that are vacant, that are generally substandard, that in most situations, Mr. Chair, would end up meeting the bulldozer if not having something to happen to them. But again, you know, structurally, they're still good homes. They just have issues that need to be dealt with and can get back into the pipeline.
Senator Dietzich, any follow-up?
No, thank you.
Okay, thank you. Senator Duckworth, do you have anything to add to those questions?
Very briefly, Mr. Chair, thank you. And Senator Dietzich, thanks for those great questions. As mentioned before, this really helps meet the demand of the inventory shortage that we're facing in all parts of the state, in this case specific to some rural areas. Rather than take a housing unit out of commission, this way we can, you know, keep it, get it back into inventory and get folks into it. You know, in building a new home, that's a process that can take months. And that's if the land's already developed and it's very expensive. This is a much faster way to hopefully try to positively impact some of the housing unit issues and shortages we're seeing across the state. So that's all I've got to add, Mr. Chair. I appreciate your time in bringing this before the committee today. Thank you.
Thank you. Any other questions, members? Well, Senate File 19. Thank you, testifiers, for coming and speaking today. We'll move to lay over Senate File 1904 for possible inclusion. Thank you, members, and Senator Duckworth. Next up, we have Senate File 1839, Senator Port, Housing Support for Persons with a Mental Illness Appropriation. Senator Port moves Senate File 1839 to be laid over for possible inclusion in the Housing Omnibus Bill. Senator Port, I understand you might have an amendment.
Yeah, thank you, Mr. Chair. I do have an amendment. This bill is a funding increase appropriation for the Bridges program and the Landlord Mitigation Fund, and I do have an A1 amendment to get the bill in the shape we want to move it forward.
Okay, so this is an author's amendment. Members, please turn on your cameras and your microphones. We are moving the, so Senator Port, I assume you want to move your A1 amendment.
Yes, Mr. Chair.
Pretty straightforward, members. All in favor of the A1 amendment, please say aye. Aye.
Aye.
Aye.
Opposed, nay. Motion carries. To your amended bill, Senator Port.
Thank you, Mr. Chair and members. To SF 1839 as amended, in the conversations we've had in this committee, it's clear that we all understand that where we live matters and that having stable housing allows for people with mental illnesses to focus on their recovery and turn their attention to other goals like employment and education. Unfortunately, people living with mental illness are much more likely to experience housing instability or even homelessness. Unmanaged mental health symptoms, job loss, inpatient mental health treatment, or an experience with the criminal justice system all increase the challenges that people with mental illnesses face when they're trying to find a stable housing situation. And they also place an expensive burden on our emergency services. Access to housing interrupts this cycle and allows people to focus on other priorities. Unfortunately, homelessness has been getting worse in Minnesota, as we've heard in this committee. Before the start of COVID-19, the most recent Wilder homeless count found a 10% increase in the number of people experiencing homelessness between 2015 and 2018, with a higher rate of growth in greater Minnesota. Most of those homeless adults also have a chronic health condition, with over 60% of respondents having a serious mental illness and 24% living with a substance use disorder. And while the eviction moratoriums at the state and federal level have protected many families during this pandemic, there is a significant chance of a surge of people experiencing homelessness with these conditions once those moratoriums expire. Expanding the Bridges program will help to address some of those needs all across Minnesota. I do have two testifiers today, Mr. Smith from NAMI, who can talk briefly about the programs, and Mr. Rasmussen, a beneficiary of the program, who can share how it's impacted his life. If we could go to those testifiers, Mr. Chair.
Thank you, Senator Port. I don't know, Mr. Rasmussen, do you want to start, or is Mr. Smith going to start? Whichever one, please state your name for the record and who you represent for the record also, and then begin testimony.
Mr. Chair, members of the committee, my name is Sam Smith, and I'm the Public Policy Coordinator at NAMI, Minnesota. I'm here today to testify in support of Senate File 1839. Navigating a serious mental illness while also experiencing homelessness often traps people and forces them to rely upon emergency services, hospitalization, or worse, end up in jail or prison. And stable housing can get them off this carousel and back on with the rest of their life. While the factors that drive people into homelessness are complicated, the solutions are often simple. There's not enough affordable housing, and there are too few supportive services to help people transition from homelessness into a stable housing situation. Senate File 1839 invests in two proven programs that help people with mental illnesses and other barriers access affordable housing. Bridges provides housing subsidies to people living with serious mental illnesses while they're on a waiting list for the Section 8 housing assistance. We know that these waiting lists are too long. Among all homeless adults interviewed during the Wilder homeless count, we see that 50% of respondents reported that they are on a subsidized housing waiting list with an average wait time of 12 months. As with Section 8, people on Bridges rent an apartment at the regular market rate and pay 30% of their income for rent. The program provides vouchers to cover the balance. Bridges is administered by local housing authorities or other entities who manage Section 8 programs and is available in 70 counties and the Leech Lake, Mille Lacs, and Bois Forte tribal nations. These programs currently serve over 800 individuals and families with serious mental illnesses, with nearly a third of Bridges recipients being households of color. With tight rental markets, it can be very challenging for people with housing vouchers and other housing supports to find a landlord that is willing to rent to them. These challenges can be even greater for people with mental illnesses, experience with the criminal justice, or those with poor rental histories. Landlord risk mitigation funds respond to this problem by providing insurance for the landlord. If a tenant on a public housing voucher damages the property or fails to pay rent, the risk mitigation fund can offset some of these costs. Landlord risk mitigation programs funded by the Minnesota Housing Finance Agency are currently available in Dakota, Scott, Anoka, Washington, St. Louis, Crow Wing, Morrison, and Todd County, with 45.7% of tenants from the BIPOC community. Landlord risk mitigation funds help people with significant barriers find and maintain their housing. Both of these programs work, and NAMI Minnesota urges you to increase their funding. Thank you for your time and support of people with mental illnesses. I'm happy to answer any questions you have.
Thank you, Mr. Smith. I think we'll go to the other testifier first and then come back for questions. Members, Mr. Rasmussen.
Hello, my name is Nicholas Rasmussen, and I reside at 6953 West 140th Street in Savage, Minnesota. And I was a software engineer and entrepreneur. I worked often and slept little. In 2013, I experienced a psychotic break. It was 36 months from the onset of symptoms before I received the treatment I needed. During the interim, I had repeated contact with law enforcement, the judiciary, community members, and healthcare workers. Prior to getting the help I needed, I consumed massive amounts of resources for no real benefit to anyone. When my illness was finally identified and I received the hospitalization I needed, my illness had progressed to the point where I spent 2 months in a psychiatric unit at Abbott Northwestern Hospital at a cost of $176,525.40. I then spent approximately 2 months in an IRT center. I don't know how much that cost. While in the hospital, my home was foreclosed on. I was very fortunate that I was able to convince family members to move some of my things out of my house before the bank took it back, or I would have no longer had any possessions. On discharge from the hospital, I was homeless. I'm very fortunate that I had an adult mental health caseworker assigned to me, as he was able to make arrangements for me to reside in Scott County's transitional housing, which in this case was a duplex owned by the county. My relationship with my family had deteriorated to such an extent they were no longer willing to offer me a place to stay. Again, I was very fortunate that my case manager was able to get me a Bridges voucher, which gave me 60 days to find housing and would subsidize my rent. After much difficulty, we found a landlord who would work with the voucher in my now bad credit and criminal history. Without the Bridges voucher, I believe I would have ended up in a homeless shelter. Unfortunately, the Housing Choice voucher is not a readily available source of housing support. In Scott County, the waiting list, which recently opened up for about a week, had been closed for 14 years. Thank you.
Thank you for sharing your story and enlightening us on this. Senator Port, did you have any additional comments before we go to questions?
Just briefly, the Bridges program and the accompanying landlord mitigation fund is just a really important tool for addressing the housing needs in Minnesota. I appreciate your consideration in including it in the final bill, and happy to take any questions folks have.
Senator Dietzig.
Thank you, Mr. Chair. And I want to thank Mr. Rasmussen for testifying. I think that's very courageous, but I think the more that we share our stories and people share their stories, I think the more it removes any stigma. And I think that it goes a long way. So thank you for sharing your story. I also think the part about, unfortunately, the issues that you had with your family and then losing housing, I think that is not that uncommon. I mean, I used to work at Hennepin County, so I heard it all the time. So again, sharing those stories so people understand what is actually happening out there really helps. So again, thank you for doing that. Truly appreciate it. I think that is, you're not just helping yourself, you're helping everybody. So thank you again. And does Dan Mueller know what do we have this landlord? What is the base for the landlord mitigation fund currently? What are we at? I know in when I used to be on judiciary, we heard a lot where landlords were okay with renting from people. They just needed that, they talked to the people, they felt comfortable. They just wanted that extra assurance to make sure that if anything did happen, they had some money. And I think my understanding in talking to landlords and the department at that point was in a few years, it was barely used, maybe like twice in quite a few years. So if Mr. Mueller has the amount, if there is one currently, or what the base is for this landlord risk mitigation fund, I think that would be helpful.
Thank you, Senator Dietzig. Mr. Mueller, are you available to answer the question?
Sure. Mr. Chairman, Dan Mueller, the fiscal analyst on the committee. The last time that I know of that the state put money, state appropriated directly money for landlord mitigation fund, at least through Housing Finance Agency, was back in fiscal year 2017. There was a $250,000 one-time appropriation for that purpose. And like I said, that was a one-time appropriation. So there is no base funding for a landlord mitigation program. It doesn't prevent, local governments from running them on their own. But as far as state money going into it, as far as direct appropriations, that was the one time. What I don't know, and maybe if anyone is on from Housing Finance Agency, if they use any of their own resources for a landlord mitigation programs or grants to local governments. That's the question I don't know right now.
Mr. Mueller, do you know the balance of that fund?
Mr. Chairman, like I said, this was put out back in 2017, so I believe, it would have, since it was appropriated to Housing Finance Agency, it was available till spent. And I will have to follow up. I don't know if they distribute all that out to local governments or not, but it's available till spent, so.
Okay, that's something we can follow up with.
Sure.
To Senator Dietzich, very good question. Unless there's someone from the agency on that could lend a hand on that. If not, we'll have to follow up and maybe bring that up at the next committee hearing to give everybody an update. So I am not hearing anybody from the agency. Senator Rosen.
Thank you, Mr. Chair. That really brings up a good point of the federal funds coming through. This would be basically a one-time appropriation, if that's something that could supplant. Just throwing it out there, Mr. Mueller, maybe something to look at. And I do want to thank Mr. Rasmussen also for testifying. That is very brave and heroic, coming on and basically laying out your life story and the issues that have been very hard to work through, but appreciate you being here. I know when I first started in the legislature, and I think Senator Rest and Senator Dietzich, and you could probably attest to this too, that we never talked about mental health, much less mental health and housing issues or anything. It was never discussed in committee. It was always silent, put a little money towards it, but never addressed that issue like we are now. So, Mr. Chair, I really appreciate you taking this on, and Senator Port for your leadership in this area. I think it's extremely important. So perhaps we can figure out something with the federal funds that could supplement this program.
Thank you, Senator Rosen. I would agree. And once again, thank you, Mr. Rasmussen and Mr. Smith for enlightening us to this bill. Senator Port, I don't see any other questions, and we are 10 minutes early, which is fantastic. Do you have any final comments?
I have been reaching out to Minnesota Housing, and I think we're still trying to figure out what of those federal funds are sort of flexible for things like this. So that was part of the reason of not putting a specific appropriation in the bill. Wanted to make sure it's part of the conversation, but happy to continue to follow up both with you, Mr. Chair, and with Minnesota Housing as we move forward to make sure that funding does fill the needs of this program.
Thank you, and thank you for bringing it forward. So members, we will lay over Senate File 1839 for possible inclusion. I do not have anything else on the agenda, so I thank you all for bearing with this hearing today, and I apologize for being so late. We will adjourn, and we will see you in a couple of days. Thank you.